Welcome to the Opportunity series brought to you by OptionsLake, creating opportunities through the power of options. This series of videos will cover a high-level view of how options can be leveraged by a typical individual investor. Hello everyone, in this video I'm going to talk about how to get started on options trading with small account size. So let's first talk about what's a small account. Generally, portfolio with less than $25,000 of cash equity is considered to be a small account. But at least 2,000 of portfolio is preferable, and that's the minimum amount required by FINRA for opening a margin account. Now let's talk about the tips to consider while trading small account. Number one, small trades. No single position should be more than 5% of overall value. Number two, limited risk strategy should be employed, which means that absolutely no naked positions. Number three, high probability trades. We're going to talk about one example in one of the slides later. And number four, trading discipline, which means having a checklist for entry exit criteria, having the discipline for cutting losses, and so on. Now let's look at a trade and compare and contrast an unlimited risk trade with a limited risk trade. So as you see on this chart, the top one is selling a straddle and the bottom one is selling an ardent fly. And as you can see, in selling a straddle, you have an unlimited risk on both the left and the right side as indicated by the red arrow. Whereas in selling an ardent fly, it carries a limited risk. So if you are trading a small account, guess what? You should not be trading selling a straddle, but more so selling an ardent fly. Let's look at some other examples of limited risk strategy, right? As denoted in this graph. Number one, just buying a call, which is on the bullish side, or buying a put on the bearish side. Similarly, buying a debit spread on the bullish side versus buying a debit spread on the bearish side for a bearish trade, right? All these, as indicated by bullets 1 to 4, have limited risk defined. Now let's look at an example of high probability trade. So this is a risk reward for Morgan Stanley, which let's assume is in a bullish phase. Even though the stock is trading at $94.55, you can buy or rather you can sell a credit spread on put side, wherein the trade will get into maximum profit even if it falls to $85 or below. So even though the reward for this particular trade, which is only $35, so this is an example of high probability trades, which again is an important part to have in a portfolio when you're trading a smaller account. Now let's look at another example with respect to how you need to be disciplined with respect to cutting losses. Here's an example. So let's assume we are on 22nd October 2021. This is a square chart. As you can see, it's a very bullish looking chart. The price is above all the three moving averages as denoted by these three lines. Fast forward 22nd October, retake. This is the retake. Because the chart is bullish looking, let's get onto a trade with a bullish call spread, having a max risk of 200 to max reward of 300. Now let's fast forward to 28th October 2021. As you see, there is a price reversal, but still it's trading above the 21-day exponential moving average, which is a white line. So it still holds the structure, and hence we'll still carry forward the trade as per our discipline. At this point in time, the trade is already $66 in loss. Now let's fast forward to 3rd November. As we see, the price fell further down and it broke its 21-day EMA, the white line. Now this is the time to cut the losses, right? So at this point of time, looking at the risk reward, the trade is already at $118 of loss, but it's good to be disciplined and cut the losses instead of just hoping for the price to turn back up when the technicals are not indicating that. And let's now look at what happened to this chart. Fast forward 9th November, the price kept coming down. 15th November, even further down, right? So, that's where the discipline really helps in trading. So to conclude, for trading in a small account, here are the 4 things I want you to keep in mind. Number one, small trades. No single position should be more than 5% of overall portfolio. Number two, always think about getting into a trade with limited risks and not any naked positions. Number three, try to have a good portion of your portfolio in high probability trades. And number four, having a trading discipline, which means checklist for entry exit criteria, having the discipline of cutting losses, etc. Thank you. Options is one of the most creative financial instruments available to all of us. And despite many misconceptions that exist around how options are really only for the big guys, there are ways for an average retail investor to leverage options. All it takes is a little bit of foundational education and potentially some hand-holding. That's what we at OptionsLake do. If you'd like helpful tips on options on a regular basis, make sure to hit the subscribe button. For other resources like blogs, articles, please visit our website at www.optionslake.com.